Join me as I dive deep into the world of trading and challenge myself to uncover the best technical trading secrets that could change the game. Technical trading is a powerful tool that helps traders make informed decisions by analyzing past market data, primarily price and volume. By mastering technical trading, you can identify trends, predict future price movements, and set strategies to maximize your gains. It's not just about understanding where the market has been. It's about using that knowledge to make smart trades. Many traders struggle with common misconceptions when interpreting technical indicators. One big myth is that technical analysis is a crystal ball that predicts the future with certainty. It's not. Technical indicators are tools, not magic wands. They help you understand market sentiment and possible future movements based on historical data. Another challenge traders face is overcomplicating their analysis. With so many indicators available, it's easy to get overwhelmed. The key is to keep it simple and focus on what really works. Let's explore some essential technical trading indicators. Moving averages, for instance, help smooth out price data by creating a constantly updated average price. This makes it easier to identify trends. The Relative Strength Index, or RSI, measures the speed and change of price movements, helping you spot if a stock is overbought or oversold. The Moving Average Convergence Divergence, or MACD, is great for identifying trend reversals and momentum. By understanding how to read these indicators, you can make more informed trading decisions. One of the most powerful technical trading secrets is the concept of confluence. This means using multiple indicators to confirm a trade. For example, if the RSI indicates a stock is oversold and the MACD shows a bullish crossover, that could be a strong signal to buy. What makes this strategy so effective is that it reduces false signals. By requiring confirmation from multiple sources, you increase the reliability of your trades. Let's look at a real-world example. Suppose you're eyeing a stock that's been in a downtrend. The moving average crossover indicates a potential reversal, and the RSI shows the stock is oversold. This confluence of signals could be a great opportunity to enter a long position. To apply this strategy effectively, start by identifying a trend or range-bound market. Then, use indicators like moving averages and RSI to find potential entry and exit points. Always look for confluence to increase the odds of a successful trade. Practice this approach with historical data to build your confidence. In conclusion, mastering technical analysis is crucial for any trader looking to improve their performance. By understanding and applying technical indicators like moving averages, RSI, and MACD, and by using the powerful strategy of confluence, you can make more informed trading decisions. We'd love to hear about your experiences with technical trading. Share your stories in the comments below, and don't forget to watch our next video on advanced trading strategies.